Hello students, welcome to Mr. TK classes. Today we are doing leases. So we are doing question 4 from FAC 2601 October November 2020 UNISA question paper. The question reads, a manufacturing company, Semcon Limited, entered into a contract on 1 January 2019 whereby a robotics arm with a total cash selling price and fair value of 850,000 would be leased from Fanuc Limited. The contract is a lease in terms of IFRS 16 leases. The robotics arm is used in their manufacturing process to speed up their manufacturing time, producing more units per hour. The lessor did not incur any initial direct costs. Semcon Limited paid 30,000 legal fees for negotiating the lease. For tax purposes, the legal fees incurred by Semcon Limited are of a capital nature. The period of the lease is 3 years, and the lease payments of 98,500 are payable quarterly in arrears. Semcon Limited will obtain ownership of the robotics arm at the end of the lease term at no additional cost. The interest rate implicit in the lease is 21.91% per annum. The profit before tax of Semcon Limited for the year ended 31 December 2019 before the above lease transactions amounted to 550,000. The robotics arm have a new residual value and will be depreciated over the expected useful life of 4 years according to the straight line method of depreciation. The company's reporting period ends on 31 December each year. Required: A. Prepare the journal entries of Semcon Limited to account for the above mentioned lease for the financial year ended 31 December 2019. So in this session we are only going to do part A, so we skip part B. Alright, please note your answer must comply with the International Financial Reporting Standards IFRS, but IFRS 7 disclosures is not required. No journal narrations are required. Accounting policy notes are not required. Comparative figures are not required. Round all amounts to the nearest rand. Show all your calculations including the amortization table. So we are going to do our journal entries for part A here, then the amortization table. Okay, we start. Alright, let's start with our journal entries. We start with the first paragraph. A manufacturing company, Semcon Limited, entered into a contract on 1 January 2019, whereby a robotics arm with a total cash selling price and a fair value of 850,000 will be leased from Fanuc Limited. Okay, so the company is going to get an asset, right, as a result of a lease liability. So the asset is right of use asset, and this is a machinery. And remember, assets are shown in the statement of financial position. Okay, so we want to recognize this asset. So when we want to recognize an asset, we have to debit, right? Our assets are increasing with this machinery, 850,000, right? But remember, we are getting this asset as a result of a lease liability. So we are going to credit lease liability. We are going to credit lease liability. There's no payment here. We are getting it as a result of lease liability. So we are going to credit this liability. And also remember that liabilities have a credit balance. Okay. Liabilities have a credit balance. Then we are done with the first one. Let us go to the second one. The lessor did not incur any initial direct costs. Semcon Limited paid 30,000 legal fees for negotiating the lease. For tax purposes, the legal fees incurred by Semcon Limited are of a capital nature. Alright, so since this 30,000 is of a capital nature, it means that we are going to treat it as part of our asset, right? So the asset that we have now will no longer be an asset of 850,000. It will be 850,000 plus this 30,000, because we are going to treat this as we are going to treat this 30,000 of legal fees is of capital nature, so we are going to treat it as an asset. All right, so we are going to take this. Let us just put it here. Then we recognize that 30,000 as part of our asset because it's of capital nature. All right, then the other thing, is it a liability? No. Semcon Limited paid 30,000, so this was paid. Bank, this was paid. Our bank account will be decreasing with the payment that was made. So we are going to say 30,000. So this was paid, so we are going to credit our bank account. We are going to credit our bank account. Then we move on to the third one. The period of the lease is 3 years, and the lease payments of 90,500 are payable quarterly in arrears. Semcon Limited will obtain ownership of the robotics arm at the end of the lease term at no additional cost. The interest rate implicit in the lease is 21.91% per annum. All right. Let us come down here. We are going to do our amortization table here. All right. So if you look at this information that we are given, they said 98,500 is going to be paid, is payable quarterly in arrears, right? And we are doing our journal entries for 1 year only, because they said prepare the journal entries of Semcon Limited to account for the above mentioned lease for the financial year ended 31 December 2019. So we are only doing for 2019, because remember, this asset we entered into a lease agreement on 1 January 2019. So we are only going to do our journal entries for a year, but we are going to break this year into 4 parts, because we have 98,500 which is going to be paid quarterly. So if it is going to be paid quarterly, it means it is going to be paid 4 times in a year, right? So we are going to say first quarter, second quarter, third quarter, and fourth quarter. So now what we are simply going to do, all right, under dates, the first quarter will be 3 months, right? Because remember, our year is now broken into 4 parts. So the first quarter has 3 months. These 3 months will end 31 March 2019, and the other 3 months 30 June 2019. Then the other 3 months 30 September 2019. Then the other 3 months 31 December 2019. This will be the end of 2019. All right, so the installments that are going to be paid 98,500, right? So we are going to say the period of the lease is 3 years, and the lease payments of 98,500 are payable quarterly. So 98,500 is payable quarterly. 98,500 is payable quarterly. So we are going to, all right, we are going to put it under installments. Let us just add 1 column here. All right, so the amount that we will be paying, the amount that we want to pay, is this lease liability. Remember, the 850,000 is not paid, so this is what we'll be paying. So let us take it and write it under balance. 850,000. 850,000. All right, so now let us calculate the interest then. Let us calculate the interest. Remember, this is our percentage, 21.91%. So we are going to say, all right, let me just put it here. Okay, So we're going to say 21.91% multiplied by 850,000. What do we get? We get this. But remember, our interest rate is per annum. So let us multiply by 3 over 12. Because remember, the first period that we have here is 3 months. Because we have divided a year into 4. So the first period is 3 months. So what are we going to get? 46,000. We are going to get 46,559. So now let us calculate the capital portion. We are going to say 98,500, which will be paid. Subtract the interest, right? So the capital portion is 51,941, right? Then let us calculate our balance here. We are going to say 850,000 subtract 51,941. What do we get? 798,759. Okay, why do we subtract this one only? We subtract this one because remember, we want to pay this lease liability. So whenever we are making payments, we are paying part of this, and we are also paying interest. So this installment that we have made, or this installment that will be made of 98,500, includes part of this amount and the interest, which is this one. So we first calculate the interest, then we know that the rest is the capital portion, right? So now let us calculate interest that is going to be paid in the second quarter. So we are going to say 798,059 multiplied by 21.91%, right? Multiplied by 3 months over 12. Okay, what are we going to get? We are going to get 43,714. 43,714. Let us calculate our capital portion. We are going to say 98,500. That is going to be paid. Subtract the interest. The capital portion will be 54,786. 54,786. So what is our balance now? 798,059 subtract 54,786. What do we get? 743,273. Okay, then now let us calculate our interest. We are going to say 743,273 multiplied by 21.91% multiplied by 3 over 12. We are going to get 40,713. 40,713. Let us calculate our capital portion. 98,500 subtract 40,713. We are going to get 57,710. 57,710. 87. 57,787. Okay, let us calculate our balance. We are going to say 743,273 subtract 57,787. What do we get? 685,486. 685,486. Okay, let us calculate our interest. Multiply by 21.91%, multiply by 3 over 12. You are going to get 37,547. 37,547. 37,547. Okay, let us calculate our capital portion there. 98,500 subtract 37,547. What do we get? 60,953. 60,953. Okay, now let us add our columns. The installment column, we don't need to add one by one. Just say 98,500 multiplied by 4 because there are 4 amounts there. 394,000. Right? Then our capital column, 51,941 plus 54,786 plus 57,787 plus 60,953, get 225,467. Okay, then now let us add the other column. 46,559 plus 43,714 plus 40,713 plus 37,547. Get 168,533. 168,533. Okay, so now we go back to our journal entries. We are going to say in the first year, this is what is going to be paid, right? In the first year, this is what is going to be paid, right? Let us just skip 2 lines, 1, 2, 3. Okay, let's indent a little bit. We already know that when you are paying, it's bank, right? When you are paying, it's bank. In the first year, this is what is going to be paid. So how much is going to be paid? 394,000. 394,000 is going to be paid. Okay, so this 394,000 will be paid towards this lease liability. So we want to reduce this lease liability. So we are going to say lease liability. We are going to say lease liability. SFP, statement of financial position. So lease liability, we are taking this capital portion, right? We are taking this capital portion. We are taking this capital portion of 225,467. 225,567. Okay, 467, sorry. 225,467. Then we say finance cost. Finance costs. All right. This is the interest, right? 168,533. Okay, so the account that will credit is the bank because it is decreasing. When a bank is decreasing, you credit. Then now we are going to debit our finance cost and the lease liability. So this lease liability is meant to decrease this amount. That's why we are debiting, right? We are decreasing an amount that is on the credit side, so we debit. This was a liability. Now we would have paid the liability. So to decrease it, we should debit. All right. So let us move to the next one. All right. So there is another. All right. There is another thing that I saw here. The profit before tax of Samcon Limited for the ended 31 December 2019 before the above list transaction amounted to 550,000. The robotics arm have a new residual value and will be depreciated over expected useful life of 4 years using the straight line method of depreciation. So this will be very easy. Depreciation will be very easy to calculate. Remember our asset, we said this is the amount, this is the value of our asset, right? Then we said this is also part of the asset since it is capital in nature. So we are going to add 30,000 there. 30,000, right? So how much do we get there? 850,000 plus 30,000. We are going to get 880,000, right? Okay. So now the method of depreciation is straight line method and there is no residual value and the useful life is 4 years. So we are just simply going to say 880,000 divided by 4 years. Divided by 4 years. Divided by 4 years. 880,000 rands divided by 4 years. How much are we going to get? How much are we going to get divided by 4? We are going to get 220,000. So this is our depreciation in the first year, 220,000. So remember, depreciation is an expense. So we debit, right? Depreciation. We debit this expense of how much? 220,000. Debit this expense of 220,000. Then what are we going to credit? We credit accumulated depreciation. Accumulated depreciation. We credit accumulated depreciation. So this accumulated depreciation is meant to decrease the asset that we'll be having. Since the asset is depreciated, remember our asset, we were debiting our asset. We were saying our asset has a debt balance, we're debiting. So now that it has depreciated, to reduce it, we reduce it using accumulated depreciation. So we should credit it, right? Okay, so this will be a profit or a loss, right? It will go to profit or loss. Then this one will go to the statement of financial position. This one goes to statement of profit or loss and other comprehensive income. This one goes to statement of financial position. Okay, so we are done here. Right, so this is how we do our journal entries and this is how we do our amortization table. We are done with our class for today. Thank you. We meet you in the next lecture. Thank you.